the recessionary fears will eventually dissipate and go away, and the momentum will come back into crypto. So alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to be zooming out, taking a look at the macro and the total cryptocurrency market cap, and doing a couple of forward-looking projections via some things that could possibly unfold, considering the fundamentals that are set to come out over the next consecutive couple of weeks as we roll over into September, awaiting the possible rate cuts from the Federal Reserve. So if you all enjoy these video breakdowns, we're going to be jumping into fundamentals, playing some video clips, and just taking a look at the macro in today's video. Do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. It does help this platform grow, and it does boost the algorithm, pushing these video breakdowns out to more individuals like yourselves. So before we get started on the macro, so that way you guys don't think that I am bearish on the cryptocurrency market, and so that way you can actively see inside the CYPRX private community, we are taking advantage of discounted opportunities in the now when they arise by utilizing the institutional delta zones that our institutional scalper provides to the private CYPRX monthly members. I want to show you guys, as always, calling these moves out in advance to our private members, keeping them ahead of the curve, regardless if it's fundamentals or through technical analysis. So both myself and institutional scalper are always constantly putting out dollar cost average levels, showing individual participants in our community where we are entering into the market or areas of interest to look forward to when looking at entering into DCA levels. So here you can see on Thursday, August 15th, this is within inside our private CYPRX community, our institutional scalper was sending institutional delta zones. And I want to show you guys the power of these levels. You can see here, these are some Brett USDT levels. Price was roughly around the 07819 and the 08170 psychological level. Sorry, the print's really small, I couldn't see. So roughly around 7 or 8 cents, give or take. Okay. So this was on August 15th that had been sent out to our private community. Here is our fundamental report that I sent out to the private community on August 17th, mentioning some dollar cost average levels after giving the community an update on the total cryptocurrency market cap. You can see right down here, the first digital asset that I mentioned, assets I am deploying capital into this week for my long-term bags. The first one was Brett. And if we open this screenshot right here, you can see when I sent the screenshot, Brett was roughly around the 079 cent psychological level. Well, just recently, as you guys can see, Brett skyrocketed over 46% over the last 24 hours. These green circles are the areas of interest where we had sent the information out to our private community members. So you can see here down at the bottom of my screen, this was Saturday, August 17th, the same time that I sent this report out to the members, letting them know that these are assets I'm deploying capital into. And then from our private Discord on the 15th of August, as you guys can see, looking at the timeshare right there, Thursday, August 15th. If we go head over to the charts, you can see right down here, this is the general area where price was at on Brett. So just measuring and showing you guys that we are not bearish on crypto. We're actively dollar cost averaging in and taking advantage of discounted opportunities when they arise. So that way, as we progress through this video breakdown, you don't think that I'm bearish or that I'm calling for a market collapse. I look forward to these discounted opportunities as an investor because I understand that the upside potential is so much more prevalent than the downside risk, in my personal opinion. Again, not financial advice, to each his own, do your own personal research, but just to show you guys that we are giving opportunities out to our private community members. If you want access to these delta zones, they are the most accurate levels that retail traders have access to, and we are the only community on the internet with access to them. You guys can visit CYPRXtrading.com and get direct access to them by entering in our private Discord. Interestingly enough, this is a bullish announcement from Binance. Binance Futures, as of today, the 20th of August, that's time of recording this video breakdown, Binance Futures will launch USD margined Brett perpetual contract with up to 50x leverage. So I'm just going to go ahead and assume that that is why we saw an increased demand overnight for Brett. I'm definitely looking forward to this. This is the only meme coin in my portfolio, and I have a very large bag. I've been dollar cost averaging into this project since it was roughly around $300 to $400 million in market cap. So it has been an extremely interesting ride, seeing it go all the way up and surpass 1 billion. And I have high hopes and forward-looking projections for this specific project on base. So I just wanted to get that out of the way and show you guys that we are bullish. Now let's roll over into the fundamental breakdown and take a look at the total cryptocurrency market cap cap, and some things that I and us here at CYPRX are paying attention to in the near future. So just to show you guys that we have been covering this not only publicly, but also with inside our private community, I have been dropping our private community updates to you guys on the X space so that way you all can read them and, decide whether or not you want deeper access to the information that we provide at CYPRX. Here is a report from August 15th, 2024, where you can see we talked about the cryptocurrency market staying suppressed under $2 trillion. We talked about the US economy remaining slightly resilient according to the data. We talked about the yen carry trade fears, the geopolitical instability on a global scale still remaining a concern amongst market participants, refraining from them placing aggressive bullish bets in risk assets like crypto. So you can see these are all dynamics and things that we have discussed in previous market breakdowns that I made public to you guys. Now, at the same time, when you actually open these reports, yes, we experienced a market downturn at the end of July rolling into August, where the total cryptocurrency market cap went from roughly around 2.3 trillion all the way down, plummeting to about 1.7 trillion. However, we mentioned in reports that it is extremely important to remain optimistic that these macro trends remain temporary and that the overall zoomed out perspective of this digital asset landscape is bullish. If you do your research, if you understand the developments that are happening behind the scenes, it does not take a sophisticated, smart person to see that this industry is bullish long term. The short-term downswings that we are set to possibly continue to experience will, and again, my personal opinion, all be short-lived. So just reading that and reiterating that to you guys, again, not financial advice, just to show you that albeit, yes, we're going to do a macro breakdown, which is going to seem like we're bearish in the short term. Again, just taking into consideration some of the things unfolding in the market landscape. I want you guys to understand, looking out, we are taking advantage of opportunity, as you guys can see, via dollar cost average levels that we're taking and some things that we're reiterating to our private community members that we gave you all access to publicly. So I said, the purpose of this visual is to highlight the massive opportunity at hand rather than succumbing to fear, uncertainty, and doubt. Remember, 99% of millionaire investors will tell you that they became wealthy by seizing opportunities during market downturns when everything was discounted and others were fleeing the markets. This is a test of character and psychology. You must understand that these market downturns are temporary and that digital asset prices will eventually recover. Now, I want to play a video clip of one of my favorite seasoned investors, Raoul Paul, from his YouTube platform, where he goes on to discuss the markets with, if I'm not mistaken, Anthony Scaramucci, if I'm saying his name correctly. But just to show you guys, remember, look at the date. This is from 6 days ago. And in this, he talks about the macro, he talks about the yen carry trade, and he talks about how all of this temporary sell pressure in crypto is, in his personal opinion, it's temporary, right? And just to reiterate what we've talked about and conveyed to our private members. So let's just present this screen, and I just want to share this video real fast so you can hear.
Yeah, when you invest in the crypto asset class, you expect volatility. If I go back over all the years I've invested, most years you get 2, 3, or even 4 30% drawdowns. This one in Bitcoin has been 27%. It's kind of within the range of normality. And what you need to ask yourself is the main drivers of crypto are the business cycle, i.e. where are we with the economy? Well, we're starting to pick up slowly. Inflation's coming down, rates are going to come down, liquidity is going to come in. And so therefore that's usually a very good time for crypto. So the tailwind is behind you. And the other thing, are people adopting the technology? Are things being built on it? And that's ongoing too. So when you see a news event like the last few days, driven by macro factors, you tend to think they're likely to be short term. Now, if the business cycle was getting old and the economy was starting to feel a bit more fragile, then yes, you might be worried about it. But this is early in the cycle. And generally, you have to expect the volatility. And how I've always dealt with it is a Jedi mind trick, which is you look forward to it. When it happens, you can buy more and you get to compound your returns much better than anybody else who just does nothing or tries to trade around it. So you should be thinking of these sell-offs as a gift. Is, oh, wow, if I can find a bit more cash, I can put it into the market. And you tend to do really well over the cycle by doing that strategy.
I have this whole theory. I'm going to test it on you. And I don't want to bore people with the yen carry trade because it took me 10 years.
Right. So we'll stop it there. They're talking about the yen carry trade. They're talking about the macro. They're talking about being optimistic in market downturns and taking advantage of opportunity, which is exactly what we attempt to convey to our private community members, keeping them hopeful, forward-looking, giving them accurate dollar cost average levels that institutions are paying attention to, and so on and so forth. So the reason why I'm even touching on this is because we are going to get into the macro. I'm going to show you guys how in previous market analysis, we had projected the market downturn into $1.7 trillion to the T of a degree. We were one of the only communities calling for this market pullback. And I want to show you guys that so that way you understand how simplistic this is by understanding the macro. So here is a Zoom call recording that we had. You can see the date, May 23rd, 2024. Here is a video clip of us projecting that the market cap in crypto was going to turn into some slight distribution. And we were going to go from roughly around 2.5 trillion, failing to break the April and March highs, and see a market downturn and a pullback, correcting the bullish move from the beginning of the year, from January and February that we saw back at the beginning of 2024. And we got that to the T. We dropped from 2.5 trillion all the way down into roughly about $1.7 trillion and have slightly recovered where we currently sit at now at about $2.1 to $2 trillion as the market awaits further fundamentals. So what are some of the main fundamental factors that have weighed on crypto assets across the board since the beginning of August? We had the yen carry trade unfold at the end of July. We also had geopolitical tensions and escalations in the Middle East between Israel and Iran escalate. And then we also had global recessionary fears, which in this video breakdown is going to be our primary focus because we just saw this announced today by Watcher Guru. This is from August 20th, 2024. Federal Reserve could see 1 million jobs vanish in a downwards revision. Why am I paying attention to this? And why, as my followers, am I asking that you all pay attention? Again, I'm not trying to cause fear, uncertainty, and doubt, but we know that recessionary fears and woes have weighed on risk assets in past market cycles and in past market conditions. So if we see more recessionary fears unfolding on a global scale, it is most likely going to result in larger investors than you and I temporarily selling their riskier assets, buying up safer assets like gold to again hedge against fear, uncertainty, and doubt in the market, which will create again a temporary sell-off in risk assets like crypto, which we will see here as an opportunity to take advantage of, because eventually the market environment will calm, everybody will relax, the recessionary fears will eventually dissipate and go away, and the momentum will come back into crypto. So let's break this down. I want to really cover this for you guys and go into detail, but just to show you all that this has had an effect on risk assets previous, so you don't think I'm making this up out of my ass. We're here at 12 minutes. If you guys have enjoyed this video breakdown so far, do us a favor, smash that thumbs up button and subscribe, especially if our video breakdowns have been helping you guys out navigate the markets properly. So here you can see, this is from August 5th, 2024. U.S. recession fears spark a sell-off in international markets. On Friday, this is a past Friday, obviously, of course, when the NFP report came out, I believe it was the 2nd of August, the Bureau of Labor Statistics reported worse than expected jobs data showing that the U.S. unemployment rate had climbed to 4.3% and that the economy had added only 114,000 jobs. That sparked fears that the Federal Reserve should already have cut interest rates by this point and would instead tip the economy into a recession. The central bank has spent the past several years keeping those rates at levels last seen before the Great Recession in the hopes of taming down inflation. And if we take a look at the total cryptocurrency market cap, we can see fundamental reports that came out like this one, where it literally says, crypto plunges amid recessionary fears and a market sell-off, right? We saw stocks plummet across the globe. We saw cryptocurrency plummet. And this was again at the beginning of August, where I had mentioned to you all the August high came in at roughly about $2.2 to $2.3 trillion, plummeting all the way down into 1.7. We have slightly recovered from that, and we are currently hovering around 2 trillion to 2.1 trillion in this consolidation phase. But again, market makers with much more money than you and I are clearly not taking aggressive bullish bets. And it is my personal opinion because they are waiting on further fundamental data to unfold to see the global environment, right? And so we saw a report come out today. This is from forexfactory.com. You guys can check this out yourselves. We're going to open this and we're just going to read some snippets. But it primarily says, U.S. job growth in the year through March was likely far less robust than the initial estimate. And the reason why I'm going to read this to you guys is because if this unfolds and we see that the labor market data in the U.S. isn't as strong as the market is assuming it is right now compared to the previous reports that we've just recently gotten, it could spark recessionary fears again. And what did I just show you guys? Recessionary fears were one of the main factors weighing on risk assets like crypto at the beginning of August, right? So just reading some different highlights from this. I'm not going to read the whole thing and bore you guys to death, but it says the preliminary revision may reignite the debate over whether the slowdown in the labor market risks a more abrupt downshift in the economy. Employers substantially scaled back hiring in July, and the unemployment rate rose for a fourth straight month. While that contributed to a $6.4 trillion global market sell-off at the beginning of August, the S&P 500 has recovered from those recent market sell-offs. However, the cryptocurrency market has not fully recovered. The markets have recently experienced a growth scare that led to concerns that the Fed is behind the curve and will be monitoring Wednesday's release of the benchmark revision to see if the market's initial reaction was in fact correct. The factors that lead to overstated job gains are still present. Adjusted for business birth and death distortions, payrolls for April and July 2024 are the most likely to be revised close to zero, well below a pace consistent with a neutral unemployment rate. So what should we be watching, and why could this weigh on risk assets? If the labor market data comes out bad, let's just head over to Forex Factory to show you guys how many more labor market reports we have until the FOMC meeting, which I believe is on the 18th of September. That's like mid-September. Okay, let's take a look. So right now we are in the week. Let's go back 1 week. This is the last week of August. Okay, this is the week that we're currently in. We have unemployment claims data coming out tomorrow. So that's one labor market report before the September FOMC meeting. Let's go to next week. Okay, we have another unemployment claims data reading coming out the last week of August. So that's now two labor market reports that we have before the September rate cut announcement or possible rate announcement, right? And then the first week of September, this is going to be the most important data release right here. The week of the ADP non-farm employment change, the week of the unemployment claims, non-farm employment change, and the unemployment rate. So here is another jam-packed week full of labor market data that we have to internalize and interpret before the FOMC meeting. And then here you can see this is, again, yet another unemployment claims release on Thursday, September 12th, before the FOMC release. And then here we have mid-September, September 18th, a Wednesday, the next FOMC meeting, right? So with that in mind, we need to be paying attention to these data releases. Do we see labor market data that sparks more recessionary fears, which we know in the past has created sell pressure on risk assets? Or do we see optimistic data on the labor market front for the US that pushes back the fears that the US could possibly spiral into a recession, right? That's what I'm trying to get you guys to focus on. So just taking a look at this data, utilizing artificial intelligence, we can see here, this article, again, I plugged this article into ChatGPT and asked it the simple question, explain how this could spark recessionary fears and how it could weigh on risk assets so that you guys as my viewers understand this in layman's terms. This article suggests that the U.S. labor market may be weaker than initially believed, which could lead to concerns about a possible recession. And I just showed you guys how possible recessionary fears have weighed on risk assets in the past. So we can assume that if recessionary fears spark again, we could possibly see a further market downturn, reiterating back to my previous posts and Raoul Paul. This is all temporary. If we do see another market downturn, I'm preparing you guys now as to what could possibly cause that, so that way we can take advantage of discounted opportunities if it unfolds. So weaker jobs growth. The article says that the job growth in the US over the past year might have been overstated. Economists believe that the actual number of jobs added could be 1 million, less than previously reported. This would indicate that the labor market has been slowing down more than initially thought. Recessionary fears. A weaker labor market often signals that the economy is slowing down. If the slowdown is significant, it could trigger fears of a recession, which is when the economy contracts. That means, gets smaller instead of expanding. It's the opposite of expand, it contracts, and unemployment rises. Recessionary fears usually lead to lower consumer and business spending, further weakening the economy. The impact that this has on financial markets. When recessionary fears increase, financial markets, including stocks and cryptocurrencies, i.e. risk assets, often tend to experience sell-offs as investors tend to move their money out of riskier assets like stocks and crypto into safer assets like bonds or gold. This selling pressure can therefore lead to significant drops in prices of these assets. Cryptocurrency market reaction. So I'm projecting that, again, if we see continued recessionary fears, we will continuously see sell pressure to some degree in crypto, i.e. either one of two things happening. the cryptocurrency market continuing to consolidate at roughly around $2 to $2.1 trillion, or a further market decline. So the reason why I'm bringing this to everybody's attention is because over the next, let's just say 4 weeks, if we continue to see bad labor market data sparking recessionary fears, we know that all of the bullish moon boy hype targets that everybody constantly puts out every time the market recovers are most likely right now not going to come into fruition. So don't get your hopes up and be prepared for possible lower targets if they do come into fruition, looking at it as an opportunity to enter in at a discounted price. So my projection is, let's just take a look at where we're currently sitting at, given the market cap of crypto right now. An August high of roughly around $2.3 trillion and an August low of roughly around 1.7. If we continue to see data sparking recessionary fears, and we do not see that market sentiment unwind, right? Then I'm projecting that we're going to stay suppressed below $2.1 trillion. We're going to start to revisit the monthly lows at 1.7, possibly even break lower into 1.5 before seeing a market recovery. So idea scenario number one, if we do see recessionary fears continue to unfold, is a further decline to revisit those monthly lows at 1.7 before we see reaccumulation of orders and a market turnaround. Scenario number two, if we continue to see recessionary fears, is we possibly break below, depending on how bad it gets, below $1.7 trillion, reaccumulate orders at the beginning of the year lows, January and February, roughly around 1.5 trillion before seeing a market turnaround, coming back into this accumulation area of interest that, again, roughly around 1.5 trillion. And then scenario number three is we don't see any recessionary fears continue in the market. We see optimism back in the market with rate cuts and possible healthier labor market data confirmed via the data reports that are set to come out over the next consecutive couple of weeks, driving optimism back in risk assets. And we see the cryptocurrency market break above $2.1 trillion and continue this overall trend from the middle of August, where we recovered and have been consolidating since. So scenario number one is a slight decline back down into $1.7 trillion to reaccumulate. Scenario number two is the worst case scenario, a drop off the face of the earth in crypto one last time via recessionary fears, back down into 1.5 trillion before we reaccumulate orders and flip back to the upside. Or scenario number three, we see neither scenario number one or two play out. We break above 2.1 trillion on an optimistic market mood, and we start to make a bullish recovery from where we currently stand, which would obviously, of course, be the most ideal scenario. With that in mind, all right? Again, I'm not attempting to create fear, uncertainty, and doubt in the market. I'm trying to get you guys to start to forward project and look outwards towards the future as to what could possibly unfold so you can prepare yourself. If you guys enjoyed this video breakdown, do us a favor, smash that thumbs up button and subscribe. If you guys want access to our dollar cost average levels, which are the most accurate levels that retail has access to in the market, and we are the only community with access to them, or you want access to our full fundamental breakdowns and reports that we deliver to our private community members every single evening, then head over to CYPRXtrading.com. We would love to have you in the private CYPRX Discord, learning, growing, and enhancing your knowledge about this market. As always, many blessings to you guys. Be cognizant, be aware out there, stay forward looking, and I'll see you guys in the next video breakdown.